Hello, Smart Money Tree podcast listeners. Welcome to this week's show. My name is Kirk Chisholm, and I'll be your host. So today, I'm joined with my good friend Phil Weiss. Hey, Phil.
Hey Kirk, hope you had a happy Father's Day. Good to see you this morning.
I did. Happy Father's Day to you too. It was
Thank you.
excellent Father's Day. Beautiful weather. Went for a nice bike ride with the family. Got to see some enormous houses in the neighborhood that we'll never get to live in. That shamed me for not being obnoxiously wealthy or inheriting $1 billion like these people. Um, I have to say, we found a street. It had the most enormous houses I've ever seen in my life. They could have had 5 car garages, and I wouldn't have been surprised. Um, so, yeah, just shaming me for not being that wealthy. But anyway, no, it was a nice bike ride with the family. Beautiful day. Went to Sweat House, and if you haven't been there, I love that place. Um, Actually, I'm going to start going once a week. It just made me feel awesome. So, how about you, Phil? How was your Father's Day?
It was really nice, but we did not have the weather that you did. We had pretty much was like drizzly and damp the entire day, but we did go out to there's this place in the area called Miss Shirley's. So we went there for brunch. It's my kids. We looked it up, and it's been on diners, dive-ins, and drives. Like they have, their breakfast food is really good. And then we just did some things as a family, which was really nice. Had a nice dinner, and actually we played poker at the end of the night. Family poker game.
Nice, very nice. That's awesome. Well, always glad to have a good Father's Day with the family. It's really all I want. Uh, I don't want anything, but it was funny. My father-in-law gave me a funny card, Father's Day card, and it was I think it said something like, "Do you know why Father's Day is 1 month after Mother's Day?" Or do you know why Father's Day is in June? Well, it's 1 month after Mother's Day, and it's only because people sat around and said, "Huh, did we forget something?" And I was laughing. I thought it was a really good. It was a really good card. And my kids were like, "Let me see," and they read it. They're like, "I don't get it." I'm like, "You will.
Well, yeah,
Just wait 30 years. You'll get it."
yeah. It's funny too how you say just want to be with family. Like my kids will ask me, "What do you want?" And honestly, my favorite answer is just time. Let's spend the day, and then if you want to give me something else, we can go out to lunch or something like that. Just time. Like that's the most important thing I think of all.
Yeah, yeah. No, that's all. Yeah, I agree with that. I think that's a better gift than I asked for. But yeah, just time. I mean, I just tell them just like time with them. That's all I
Yeah.
want to do. Like I don't care where we go. We just hang out. We had dinner with my father-in-law and the kids. It was great. Like it was a great day. No one's complaining. Everyone's in a good mood. It was good. And also they gave me some stuff, but that's all right. I don't need stuff. Just
Exactly.
just want to spend time with them. So it was good. It's been a good summer so far, so can't complain. Um, but that's the good stuff. So now let's get to everything else going on in the world. Uh, those of you who were sleeping all weekend might not have noticed, but there's war going on. Um, uh, I don't know what to say, but maybe that's why Trump and Musk were fighting last week, to get people's attention away from what else was going on. But apparently, there's
Yeah.
a war going on in the Middle East. Um, I know it's it's not new. I know it's been going on for 1,000 years, but it's rekindled again. So Israel attacked Iran, um, and I'm not sure what's going on. I'm not sure if we're staying out of it, if we're in it. Seems like Trump's distancing himself, but I think he's trying to be the negotiator of last resort. So Israel's doing their thing. I'm sure it's with our support, but we're not supporting them. But I'm sure it's with our support.
Yeah.
Um, hey, if you want to negotiate, we're here. Hey, if you don't, I get it. Like, I mean, it's comedy. Like it's just you can't do anything but laugh because it's so ridiculous. But yeah. So anyway, so that's going on. Lots of missiles flying, lots of explosions. Hopefully, it doesn't spill over anywhere else. But right now, everyone's just kind of just kind of looking at each other saying, all right, like we had Ukraine attacked Russia deep into Russian territory. I mean, I don't know. I don't know what to say. I personally, I didn't vote for this. I voted for peace globally, and that's not what we're getting. So,
No.
ding against Trump. It's one demerit in my book. When Biden basically started potentially World War III with Ukraine and Russia, in my opinion, he started because we kicked sand in their face, so he had to go in. That's my read of it. And this is on Trump's watch. So I didn't vote for this. I voted for no war. So whatever. Nothing we can do about it at the moment. But anyway, so Phil, what are some of the implications here? I mean, obviously this isn't good. But what are some of the implications here? I mean, you're an oil guy, so what are your thoughts?
I mean, that's what my biggest concern revolves around. And you're right. It's new, but it's not, right? Because every time we think it might get quiet, something else happens. So that's why it's not really new. But the biggest concern to me is if it does something to oil prices and makes them spike, because we're already worried about inflation. I know the numbers have been relatively tame, but we still have the tariffs hanging out over our heads. And if oil prices go up, that's inflationary. And so that's the biggest concern to me. And I think it's not that Iran is the biggest oil producer. It's the fact that they could block the Straits of Hormuz, and then that could restrict the flow of oil, to the U.S. directly. It doesn't have a big impact because we produce a good amount of our own oil. But oil prices are global. They're not regional. So while there are some regional differences, in general, oil prices are global. And so if the flow of oil is choked off, that's going to push oil prices higher, and that could be inflationary because oil is an input into so many different things. So that's, to me, where the biggest concern lies.
Yeah, and I'm looking at the oil futures here, and oddly enough, in June 11th, oil spiked, the 12th, and then the 13th. So someone knew what was going on. Must be all those insider trading, but yet not insider trading politicians, where it's totally legal, but except for everyone except for us. Like, we can't do that, but they can do that. Which always bugs the crap out of me. But anyway, so yeah, the big spike in oil hit a high of looked like 77, something like that. I think right now it's around 72, so it's come down a little bit. But yeah, I mean, I think that's everybody's biggest fear, is that we have oil prices are going through the roof. If this keeps expanding, and we'll see. I mean, if I think they just decapitated like a lot of the generals and leadership over in Iran, so it'll make it harder for them to have a response. But I don't know. I would think that if they start to block the Strait of Hormuz, that's probably the last thing they're focused on right now. I think they're focused on other issues. I mean, they're lobbing missiles into Israel, so I think right now they're just throwing rocks. But yeah, I guess we'll have to see what happens. I mean, that was a pretty substantial attack.
Yes.
I don't think it was what Trump 1.0, where they just shot a missile and killed a general. Like, this is a pretty substantial attack, as if we're just going to war and we don't give enough. Is kind of what it looks like to me. So I would imagine, if I had to guess, Trump is not getting in the mix of it, but yet obviously supporting them behind the scenes, unless it impacts us, which would be blocking the Strait of Hormuz. So we'll see. We'll see what happens. Like I said, the one thing to keep in mind here is that this term, the fog of war, which actually applies to just about anything, but obviously especially war. The fog of war is this kind of thing where all this news starts to come out, but you don't know if it's actually true. Like, here's what I know to be true. I know Israel attacked Iran, and I know Iran is sending missiles back. That much I know. Do I know what's happened specifically? No. Do I know anything else? No. But right now, that's what we do know, because we've the magical internet has shown us videos of missiles coming in and hitting, buildings and explosions. So we've seen that. We know that's true. But the rest of it, we won't know. It's like any news story comes out that says, so and so happened. Well, we don't know. Like when the Puffy trial, they said, oh, they arrested Puffy. Okay, that's all we know. Like we didn't know anything else, but people speculated. We'll know later. Like the facts will come out later. But initially, you don't really know because, people say so much, and some of it is misdirection and some of it is accurate. You just don't know which is which. So, it's kind of like the market in many ways, and I'll bring that back to the market. When you hear news stories come out, so I remember back in, I think it was 2011, when oil prices went below a very substantial support line. And I'll have to pull it up, but basically gold, I hope I didn't say oil, but gold went, I think it spiked for like a long time. And I'm trying to bring it up here so I can maybe show it on the screen. So, I got to share it. There we go. All right, here's gold prices. So it bottomed out in I think the late in 99, and subsequently went up from there all the way up to 2000 and I can't see it. It peaked right here in 2011 in August. I think it was actually okay, and then it came down. Then it just kind of went sideways for a little bit, and then it was 2013. So April 15th, I remember this because it was tax day, and I was sitting in an airport waiting to go on vacation. So April 15th, 2013, there was a support line right here. And it was right around 1550, somewhere around there, okay? And then right here you can see it spiked down. And then each day it spiked down, okay? So what basically happened was gold just plummeted like few hundred points, which back then was a lot more than it would be now. And I remember the news stories coming out because I remember how ridiculous they were. Someone said it's a fat finger trade. Remember that one? Oh, why did the market go down? Oh, it's a fat finger trade. Somebody put in a trade for a lot more than they should have. No, that's not what happened. But somebody said, oh, it's a fat finger trade on gold, or a bunch of this is my favorite. People are selling gold to pay their taxes. Yes, on April 15th, people dumped gold to buy money to free up cash to pay their taxes. I'm sure that's what happened, right? On April 15th. Okay. No, that didn't happen either. Someone said it was China. China did it. China dumped gold. Really? How do you know? Do you have proof? There's no way to prove any of those, right? And here's the thing about the market. You can't prove any of that. So fog of war, right? Oh, it's selling off. What happened? Oh, China's selling. Oh, it's a fat finger trade. Here's the thing to keep in mind. It's all a narrative. So, okay, we don't talk politics in the show, but apparently we use politics as a frame to explain ideas. So when we just talk about fog of war, right? Like something happened. Yeah, we know missiles are flying. We know that. We don't know. We know specifically if they say we took these things out. We think they're probably true. They probably wouldn't lie. They probably wouldn't say we took out the generals and they didn't. That would be kind of weird. Be easy to prove that wasn't true. But I think there's some major things you could say, all right, we did these things. There have been explosions. Okay, we know that. We don't know how many are dead. We don't know, there's a lot of things we don't know yet. Later we'll find out, and later there'll be like a quote unquote history of what happened based on the facts leading up to it, and people argue the history. But basically we'll have some sort of a factual accounting. Right now it's fog of war. It's just narrative. It could be many things. It could be they're saying something because they want a certain result. Oh, we killed all the generals. So all the other generals are like, well, they didn't find me. And somebody said they all cooped them in one place and then they bombed that. Like, who knows? Like, it's war. Like, the part about war is you don't know what's going on. It's messy. Yeah, there's a lot of inaccurate facts. Same thing like the market, right? So the market, people were freaking out because like, oh my God, is gold going to drop? And it did. Oh my God, gold's dropping. It's going to go to zero. Oh my God, I'm losing my mind. What's happening? Well, the thing about the market is you never know what's happening. You don't know why things are going on because There's no single person with the answer. It's a guess, right? It's a total guess as to what's going on. So here's what we know. The price dropped. We know that. Why? We don't know that. And we'll never know that. Remember, let's see, where was it? Indexes, S&P 500. Where is it? Remember this one? Remember this? 2011? I think it's 2011. I think it was in October. Remember the flash crash?
Yes.
I thought it was earlier. I thought it was in July. No, you know what? Maybe it was July 2010. I could have sworn it was or like May. Wasn't it May in 2010?
I don't know. I'm going to look up the date because I don't. I feel like it was a summertime thing because I remember I remember some of the stuff that I found was so crazy. You would look at ETFs, and the prices of the ETFs were disconnected from the underlying securities, and they actually had to shut down trading on some of them.
Here's what I feel like, because I remember there was a July period where we hit the low. So I think it was July 2010. So I think there was a flash crash before that, or maybe it was in the fall. Anyway, whatever it was, I remember trading that day, and it was nuts. You couldn't tell where the prices were because the prices had, like, typically with a price spread, it's like, maybe like at most $1.
It was May 6th. You're correct. It was May.
Yeah. Okay. So May 6th, 2010. So I remember trading that, and I was just trading my own account, just messing around. I was shorting the market because it was going down, and I was shorting it, and I was like, "What is going on?" And at one point, I just had to close out the position. I didn't know it was going to zero. I didn't know where the price was, because one price was like, I'm making stuff up, like 1,000. The next price was like 1,100. The next price was 950, and I'm like, "What is like?" No one knew where the prices were, so I just got out. I just said market sell, I'm out, or market buy, I'm out, like done. Because at that point, you don't know what's going on. And I just wanted a price. It could have gone lower. It could have bounced back, right? It could have been just like computer error. Like these things, and people speculated after, well, like, oh, it was a fat finger trade, whatever it was. There is no clear story as to what happened. I think there was a quote unquote official narrative in the media that was pulled out, but I don't know if there's an actually official story. I'm not sure they might have found out. Here's my thing. There were a lot of stories. None of them made any sense. Here's what I think happened. What I think happened was back then, you had a lot of algos, or, basically machine-driven algorithms that manage the market. So, we have specialists in New York Stock Exchange that sit there, and their job, they have a monopoly on trading, on making pure profit, for the one reason that they're there is that they're there to keep market order if things get nuts, and that they have to provide liquidity to the market. So if there's no buyers, they have to be a buyer. If there's no sellers, they have to be a seller, because their job is to keep order. And they get to mint money every single day, because once in a while they have to take a hit in order to keep order. That's pretty much why they're there. Now, what's happened back then is order flows are drying up because they were going all into certain areas, and basically the liquidity back then was drying up. Fewer and fewer institutions are trading. They're trading off book, dark pools, all the stuff that's going on. The liquidity was drying up. So what happened? These algorithms were trading, this is my opinion. Like, I don't know what the story is, but I'm looking at logic and saying what actually happened. What I think happened is the market started to drop. The algorithms were still on. They accelerated the drop because they were trading into it. So everybody started piling on the trade, and it just shot down, and there was no one to buy. And so if there's no one to buy, where's the price? We don't know. And it just kept going back and forth. And I think it was the algorithms, fighting each other, but there weren't enough liquidity in there. So you saw these really big price spikes. And at one point, order was restored. Now, what I thought probably happened with that drop initially is all the algos shut off. So like there was no liquidity. So there's some fighting each other, but let's just take an example. let's say there were 20 algorithms in that are naturally keeping order, and like 15 of them shut off because the markets kept going down. So they, the algorithms are run by whatever they write, right? So 15 of them shut off, or 18 shut off. They stopped because certain parameters were hit, and they said, all right, we're done. So there's like two keeping order in the market, right? And so I think the reality is that liquidity is really important for order. The more liquidity, the more order there is in the market. The less liquidity, because there really wasn't much liquidity that day, the more disorder that happens, right? It's kind of like a free market. When you've got a lot of people buying and selling and choosing prices, you have a good price. When you have one seller, monopoly, the price is not accurate. The price is crazy. So I think it's just something to keep in mind. A, you can't trust anything in the fog of war. B, you may never know the narrative, but we as human beings feel like we need to know. We have this ability that we feel like we need to know what's going on in the market in order to justify reality, because we can't be comfortable with the fact that there is no reason sometimes for things that happen. So let me just share this, and then we'll go over to Phil. So this is oil. This is crude oil, WTI. Here it is on 8 p.m. June 12th. So right before Friday the 13th, which Friday the 13th, come on. Couldn't have planned this. I feel like I'm living in a movie. Huge spike. And then, now it's kind of down. So, okay, maybe things are getting better. Maybe they killed everybody and there's no one to fight. But anyway, I thought I'd share that. I just thought it was interesting.
This is a public service announcement. Hi, my name is Kurt Chisholm, and I'm with the government, and I'm here to help. Doesn't that sound reassuring? Well, let's talk about how they're helping. The government needs your help to make our money worthless again. PPP loans, student loan forgiveness, helicopter money. Let's keep the party going until our money is totally worthless. Don't think it can happen? Sure it can. Just ask Zimbabwe, Venezuela, Greece, Germany, Hungary, Greece, Yugoslavia. Did I say Greece? As a loyal listener to their show, I want to give you free money. I'm giving away free money in one of these hyperinflationary currencies. Go to www.moneytreepodcast.com/free money and follow the instructions to get your free gift. I have a large audience and only a limited supply of these currencies. I'm not the Federal Reserve, so I will run out at some point. Make sure you get yours before I run out. Go to moneytreepodcast.com/free money. Follow the instructions and get your free money today.
This is a great reminder as to why we don't forecast, right? Because when something happens in the market, we don't really know what caused it. And I know when I used to be an analyst and I get calls and people ask me, like, I don't really know. Nobody does. And now we're supposed to forecast what's going to happen. If we don't know why the things that are happening actually happen, we can just see the price. That's the ultimate tell, right, is what the price is. But if we don't know what caused a move, how would we be supposed to be able to forecast what's going to happen? We just can't do that either. And that's why it's folly to think you can forecast the market. It's folly to think that you always know what causes the market to move. Sometimes we know in hindsight, we can go back and look and see the data, but there's a lot of different factors that come into play. So even if you think you understand it, you don't, because you don't know what you don't know. It's not as simple as we think, and that's why we always recommend against forecasting.
Yeah, it's interesting. As we kind of look here, I'm gonna talk about a few things here. I'm gonna run through a few, and we're gonna get to AI, and then we'll talk about some other stuff. So there are some stories out in the last week I wanted to share. So one of them, this is kind of disconnected from our conversation, but private equity is starting to dry up. So fundraising has declined for the third consecutive year in 2024. Private equity returns declined to roughly 3.8% last year. More than 18,000 companies had been under private equity ownership for more than 4 years, more than 6x that number in 2005. Secondaries deal volume increased 45% year over year. And we're starting to see, this is something I've been wondering for a while. We're starting to see private equity dry up a little bit. This kind of goes, Wall Street goes through cycles where it gets really hot. You get the insiders to do things, and then it starts to get hot, and then it's like the old movie Wall Street. All right, you buy some, and then you give a taste out to your friends, and then you give it a taste out to everyone else. So it's like all the insiders get the good deals, and then when they're ready to like start offloading stuff, then they start bringing in like the rubes, like me and Phil, like the retail public, that they want to sell stuff to. And I always look at this and I just laugh. I'm like, hold on a second. So the head of KKR wants to sell his shares to my clients. Oh, sign me up. That sounds like a great deal. Like the best deals there that the head of KKR, which is a big private equity firm, the smartest people in the room want to sell me something. Oh, that's got to be a great deal. I can't wait. It's like if Warren Buffett wants to sell me something, I'm not taking that deal. Like what's the old adage? If you're at a poker table and you can't spot the rube, it's you.
Yes.
If you can't spot the mark. I mean, it's the same thing in Wall Street, but worse. So if the head of one of the biggest private equity firms in the world wants to sell me something, I'm not buying it. You might want to buy it. I'm not buying it. So I'm glad to see that my spidey senses were working. Anyway, just wanted to kind of point that out. Two more quick stories. I'm going to get into some AI stuff. Another one, there was a good story, which I thought was really interesting. And it was a good summary of what's going on in the world. So I remember back a few months ago where J.D. Vance Munich speech to Zelensky in the White House meeting and Defense Secretary Pete Hegseth's proposed spending cuts. U.S. is basically folding its global security umbrella, right? We're no longer going to be the global policeman. That's the message, right? Which in some ways, is scary because if we're doing it, then, there's no war. On the other hand, are we really the white knight? No, we're not. Our hands are dirty. So in many ways, I like that because we don't need to be the police in the world. We're good at it, but also our hands are dirty. So we're it's not all perfect. And the point I'm making is, so there's a trend, is that we're pulling back globally and we're reinforcing America first, or Fortress America, as this article talked about. We're trying to push Denmark out of Greenland, China out of Panama, Argentina and Venezuela. And so we're trying to push China out of our hemisphere, and we're trying to focus more on North America, South America, and really securing, because we have two oceans that protect us. Somebody were to attack us, it wouldn't be a mistake, right? Israel and Iran, okay, you're fighting over a few inches between countries, or you're fighting over Ukraine, Russia and Europe, but we don't have that. So the U.S. is right now, Trump's trying to get us out of that, and so it's really interesting to think about what the implications are. They want the U.S. to no longer be the consumer of last resort. China is leapfrogging the West, industry after industry: autos, robots, turbines, nuclear power plants, and obviously AI and technology, which has been pretty interesting. And also, it makes the point AI is not going to be the golden goose of future profits, because they say when China enters a room, profits walk out, which is very true. And I think this is going to be an interesting. China is obviously, the talks have been going well according to Trump, which you never know if that's true or not. But they're right now, China is creating monetary stimulus to counteract the trade war. Europe is embracing monetary stimulus to counteract the U.S. folding a security umbrella. This has a lot of implications, right? Excess U.S. dollars used to come back here, or excess money used to come back here from foreign countries because we would buy everything. And if you think about the stocks that have been the beneficiaries, it's been a lot of U.S. stocks. Are they still going to be the beneficiaries? So what do you think, Phil? I mean, this is kind of a quick summary of what's going on. Like, what do you think are the implications here?
I'm not totally sure, but I'm not totally sure. Sorry, I don't have a great answer for you.
No, it's okay. I mean, I don't either. I mean, I'm reading the article and it's getting me thinking. So I wanted to share it with the listeners. Um, here's the big implication I see. For years, I looked at the world from like a macro fundamental lens of, oh, earnings are growing or they're not growing, and oh, this country's going to be great. But what I realized a few years ago is none of that matters. All that matters is where is money flowing? Where is money being printed? It's stimulating. It's basically QE, although they're not going to call it QE anymore because people know what that is. They're going to call it something else, which is basically QE. So all these countries are basically creating quantitative easing, which is basically money printing. Money printing equals higher stock prices. That's what it means, right? You don't need to know much. You don't need to know the inner workings. You don't have to be a hedge fund manager to discern the tea leaves of what's going on. Money printing equals higher stock prices. That's what it means. What happened in COVID? We had a version of QE. We're going to print money, right? Basically, we gave money to everybody. We gave cash, right? That stimulated the economy, right? What happened in all these times since 2008? QE for years. That's what's going on globally. So you want to know why stock markets are going up globally? That's why. They're printing money. China's printing money. Europe's printing money. What happened? Stock markets go up. We're not, quote unquote, printing money now, even though we kind of are. But I think that's going to start to pick up because there is a recession looming in our near future. And that's all I need to know. Right? Now, are there smaller implications? Sure. The U.S. is not going to fund Europe, but I think they're negotiating right now. So while I'm painting this picture, we'll see what happens. I think, in my opinion, it's smart for the U.S. to pull back and not be the global policeman because we're just dirty. Okay, the U.S. used to be the clean shirt in the hamper, but now we might be the cleanest dirty shirt, but we're still dirty. I don't like that. I don't like war. I don't think we should be involved around the world trying to oppress people. I understand there are security implications. I'm not denying that. That part is hard to square. It's hard to say, well, we should just be out of everything, and yet, well, people could attack us. We want to be safe, right? I mean, it's a dirty game, and so I don't know that there's a really good answer. But I'm just saying this in the stead that these are implications you need to know. These are big trends. You might not like them. You might not like the way J.D. Vance got up there and talked to European leaders. You might not like it. You might not like what happened in the White House meeting with Zelensky. You might not like, proposed spending cuts. You might not like it. And that's okay, right? It doesn't matter what you like. What matters is what's happening, right? This is not about emotion, right? It's like people want to invest in ESG because they want to feel good about their investments. That doesn't matter. What matters is money. You could do that if you want, or you could just invest and make a lot of money, take the profits and invest in some nonprofit that does good things. That would be a better strategy, in my opinion, but teach their own. The point being is you don't have to like it. The job of investing is making money, not feeling good about yourself, right? You can feel good about yourself some other time. You can take profits and feel good about yourself, but investing is about making money. So what's making money? These are the trends you need to know. Right? China's printing money, Europe's printing money. We'll probably start at some point. We're not really now, but we will, I'm sure. And if oil prices keep going higher, we'll see what happens, right? All right, another major thing going on that I had never heard of until last week. So one of our former hosts, Miranda Marquit, a good friend of mine, great woman. She tipped on to me that this has been going on, and I hadn't heard this anywhere. Now, it may be common news, but I'd never heard of this. Apparently, in October or November, Google decided to change how the internet is structured for writers. And apparently what they did, and I'm surprised I didn't hear this, but I was looking on Google, so maybe that's why I didn't find it. Shocker, this happened during COVID, by the way. Google did this too. But apparently Google locked out independent contractors from writing on big news sites. And I'm not talking about like NerdWallet and whatever. I'm talking about Forbes, talking about the Wall Street Journal, talking about HuffPo. I'm talking about all the major publications got locked out. Their articles that had independent contractors disappeared. All of them. And they're still working at getting them to reappear. Because if you're an independent contractor, that is not acceptable according to Google. But if you're a salaried writer, that is okay. So basically, Google is dictating how publications run. This is why monopolies are bad. Now, I don't know if their decision was good or bad, but Google is dictating how all these businesses are run. I think that is ridiculous. That is why you don't have monopolies. Monopolies should not dictate the business of other businesses. It shouldn't happen. And it did. And it's still happening. And people now have to become salaried employees. It's gutted the livelihood of so many writers that were just writing, and that's what they wanted to do. They just wanted to write, and they're trying to get by. Now, some writers, they survive, right? They found jobs, they found salaries, and now they can, keep working. But these articles just disappeared. So, I mean, I went last week when I talked to her, and I started Googling a bunch of miscellaneous personal finance topics, and I started to see like Northwestern Mutual as the top search result. They are not a normal search result, but like Forbes, it's like everyone in Forbes, I think virtually everyone is independent. I know a lot of friends or advisors that write for Forbes, and a lot of smart people, like, professionals, tax professionals write for Forbes, and like all that's gone. Like it's just decimated these business models. Now, like I said, I don't know the reason. I don't know if it's right or wrong. I don't know the business model of this field, but here's what I do know is wrong. Google is dictating other industries because they feel like it. And you have to basically call them and argue your case to get back on. Wall Street Journal's like arguing all these writers. Like, no, this person's a salaried employee. Put them back on. And they have to like verify like W-2 statements. I mean, it's ridiculous. They have to verify on their roles that they're actually an employee now. Really, Google. Well, this isn't the IRS. You're justifying to Google that this is happening. I mean, I was beside myself when I heard this, and I'm beside myself that no one's talking about it. There's plenty of writers out there. There's plenty on Substack and whatever. I didn't hear this. And this was 6 months ago. No, it was not 9 months ago. 9 months ago. Why didn't I hear this? Did anybody else hear this? Am I the only one? Doesn't, from look in Phil's face, doesn't look like
I didn't hear it.
I mean, this is absurd.
It is.
So, point being, check that out. See, like everyone's SEO got decimated, so you can't find them. Like, just start Google searching from the sites you used to look for, like like a NerdWallet, or like I'm just throwing out names like a Forbes or Wall Street Journal. Wall Street Journal obviously you can still find, but they're independent writers you can't find. So I would go out and just like Google search basic personal finance terms. I'll bet they don't show up. I'll bet you find like these random companies that you've never heard of who are up there, not even like normal sites. So it makes me wonder how many personal finance bloggers are out of business. It's really sad. I mean, it's unnecessary. Like I said, maybe there's a reason. I haven't heard it, but to me, no one company should dictate. And honestly, Google, I have issues with Google anyway, and I'm not going to use Gemini. I'm going to personally boycott Google because I don't approve of this stuff. But anyway, this is why you need this. This is the business model of the internet. Is there can be only one? The Highlander model. There can be only one, right? There's only one Google. They have like 94, 90 5% of the internet search traffic. Bing has some inconsequential amount. Amazon, there's only one Amazon, right? There's only one Microsoft, right? There's, if you think about these business models, like there's only one, and that's the problem. There's no competition, and then they can dictate whatever they want. Anyway, so I find that to be objectionable, and I don't know. What are your thoughts, Phil?
I find it objectionable too, but I also wonder what happens because there's a lot of things happening with search anyway because of AI, right? Because now if you go to Google and you do an AI search, you get an AI overview at the top, and then you have to go down to find anything. And so the nature of search is changing a lot too because of that. Right? You can't just get it. It used to be like a big thing to be on the first page on a Google search. Now it's even harder to do that if people even look at it, because I think a lot of times they just stop at that AI overview. And AI has changed too. Like, I'm not always using Google when I want to do a search. Sometimes I'm just going directly to AI because I can ask it a question as part of my search in a way that I can't do on Google. So there's a lot of things that are changing in that field. But the idea that they could dictate who can write for different publications and how accessible or how searchable their articles are, that just doesn't seem right at all. And you're right, that is why we try to avoid monopolies, because you can't just have one company dominate, but that is what happens in this industry. There's a lot of parts of the industry where it's just that one player. You mentioned a couple, but there's others.
Yeah, it's really sad. I mean, there's a lot of changes. I mean, I've talked about this in the show for the last few weeks with AI. AI is going to completely decimate search anyway. So I've had this back and forth with some people who are deep into AI, and they think that SEO is more important than ever. And I think SEO is dead. I think it's completely dead. I understand SEO well. It's something that I've done in the past. And if you're just getting a Google AI result, then why go to Google at all? I mean, like I said, I don't think Gemini is all that good personally. I don't think Grok's that good. I think ChatGPT and Claude are the two best, and they're pretty close. I mean, you could argue like Claude's really good for deep thinking stuff. They're better than ChatGPT. ChatGPT is a good all around one. But I think the reality is that when you go to Google and you get a AI search result, I don't go to Google anymore. Like I just go to ChatGPT or Claude and just ask questions and it'll give me an answer. Much better answer than I get on a Google search. The only reason I use Google is to find a actual specific company. Like if I'm looking for a company, it will show up. Like I'm looking for a Prize Wealth, right? And I'm going to go and look up Prize Wealth, and it'll give me the URL, right? But I wouldn't go there to ask it a question. I would just ask ChatGPT or whatever, and just give me an answer. So I think the nature of it's changing. Go ahead, Phil.
It is, and I have not had a chance to read it yet because with Father's Day, I didn't do the normal reading I would have done over the weekend. But the cover story on Barron's this week is Google search is fading. The whole internet is at risk. The lifeblood of the internet is drying up. What the decline of search means for users, companies, and stocks, because it is changing. There's dramatic change, and search is just not what it used to be. It's very different because of AI.
Well, if it's on the cover of Barron's, it must mean that that's the low point in search. Maybe it's coming back. They're always the
Exactly, they're a contrarian indicator, right?
Yeah, the covers are always contrarian indicators all the time. It's like a running joke on Wall Street for people who are in the industry, where it's like, oh, they said that the stock market is gonna keep going down. That must be the low point.
Yes,
they're always wrong in the opposite way. It's so good. There's a lot of historical examples, but yeah, I think the thing to take away from this is this: the reality of how things work is going to change. Google makes a lot of money outside of search. Their ads are going to dry up because you're not going to look at ads. You're just going to get an AI result. Google has to do this, or that you would go somewhere else anyway. So they're not dummies. The challenge I see is I'm gonna give everybody a frame here to think about. So imagine today an alien spacecraft lands, and then they just leave it here for us to look over and learn from and salvage and all that. Okay. So, and let's say we're cavemen and they leave this spacecraft. Okay. That would destroy the caveman society because no one's accustomed to this technology. No one, like, it's light years ahead of where they are now. They're using like rocks and hitting people with rock hammers, and you've got this like laser gun in the spaceship. Like they're gonna be shooting each other. Like it's if you don't understand the implications of a new technology, it destroys society, right? If you think about like microchips, right, when they came out in the 80s, they weren't very good. Imagine you dropped an iPhone, today's iPhone, into the 1980s. It would have completely destroyed our economy, right? You might think, oh, it would have been great. No, because we didn't know the implications. Like we have not had a chance to adapt to the implications, right? The internet came out, not everybody used it. Eventually we did, but like, that really changed the global dynamics. For publishing, for instance, people used to get papers. Now they could just go online and see the news. Like completely change industries. But that took time, right? We evolved to others. If that just happened, if today's internet just happened in 1980, like publishing companies would be all gone, right? They've adapted. I don't think in a good way, but they've adapted, so they're still surviving. But like, if you just dumped it on people, all of a sudden the industry would be gone overnight. People lose jobs, money be destroyed. Lots of implications. Let's say I'll give another example. Let's say I invented free power. Let's say I invented some technology and every single person get as much power as you want, much energy. It's all clean, no waste. Let's say I did that today. What do you think that would do to the economy? What do you think, Phil? You're the energy guy. What would that do to our economy?
It's hard to imagine because it'd be such a dramatic change, but certainly it would change cost structures of so many things because we use energy as an input in virtually everything that we make. And then transportation's a form of energy. And so it depends on how far you go. Are we just talking about our electricity? Are we talking about oil, right? I mean, because, oil goes into plastics, oil goes into so many things. Like if you change that, it would just change the economy. It'd be like, I guess in a way, it'd be like giving away free money, right? Because these are things that you were paying for. And all of a sudden now you're getting them for free. So I think it would contribute to inflation because those things that didn't involve energy or that they were less of a factor in the ultimate cost, they would go up in price because there'd be more capital available. So it seems to me like it could lead to a lot of inflation.
Yeah. So it's hard to say actually what would happen. Here's my speculation is that it would both be inflation and deflationary, right? And not at the same time, but like what would probably happen is the stock markets would crash because anything related to energy would crash because they're virtually useless. I mean, oil still goes into plastics and other things, chemicals, but it's mostly used for transportation, right? I mean, Phil can correct me, but it's but a large part of it, let's say, is used for transportation. And if that's gone, then that demand is no longer there. So now we've got an excess supply and less demand. So that'd be deflationary. The price would crash because there would be a glut of it because you don't need it anymore. If you think of other things that impacts, right? You got electricity. Well, what electricity is used for everything, right? I could keep my lights on all day. I could buy twice as much electric stuff. I could have an energy hog of a business. I could do lots of stuff, right? It creates no boundaries for usage of energy because it's all free and clean, right? And it would get huge profit margins for businesses that need electricity, and in many ways you'd lower the prices. You could lower the prices. You should, because the energy costs are removed, so now you could lower the prices. And on the other hand, you'd have a boom because now you have industries that were restricted by energy that now have no restriction. Now they can proliferate. So it would completely destroy the existing status quo, right? Mm-hmm. And if you had like a teleportation device, like no longer would you have cars or airplanes. My point is, like, new technology destroys the existing infrastructure. However, if you slowly eke it out into the economy has time to adapt. Remember Moore's law? Moore's law, how can you predict why am I the only one to say this? Moore's law, they started, I think it was in the 80s or whenever the microchips started. They said, oh, the speed will double every 18 months. That was the thing, right? They will get faster every 18 months. So Moore's law kept working until it kind of stopped, I think a few years ago. But basically every 18 months it would double. How did they know that? In my opinion, it was planned. Like you obviously, there's like a process. Like maybe you had stuff and you're like, well, actually we're far ahead, but we can't give it to everybody right away. It would destroy stuff. So let's eke it out. I don't know this to be true. I can't reach my tinfoil hat, but I'll imagine I have a tinfoil hat on my head right now. Like think about it. Like that makes sense. That to me is like somebody sat down and said, all right, we need to slowly eke this out or it's going to completely destroy the economy. Which it probably would have. It would have made people crazy. Like, oh, I can do all this cool stuff and I don't know how to use it. And I don't have a responsibility matrix because I didn't grow up with it. Kind of like kids with, social media and they're just blinded by TikTok because they don't know how to use it. AI is going to be much the same way. So my point is AI is a new technology. It's moving way too fast. We can't stop evolving it because China will catch up. So we're fighting China in that race to provide the best AI. And we're racing to the edge of a cliff and it's not good. Like we honestly should slow it down because at the speed it's coming out, I'm learning about this stuff, I'm applying it to my business. It is life-changing what you can do. And most people are just playing around with like, how do I get notes to my meeting kind of a AI. This is like completely life-changing stuff. Like I don't think I could have my business completely run on AI, but we're like 90% there technologically. Not us, but like the industry could be there. So that's not going to happen, by the way. People need people, but my point is, you can run a lot on AI more than most people realize, and it's gonna really change your economy. And I'm not sure what the implications are. People will lose their jobs, maybe not initially, but they'll start to. Companies are going to stop hiring people. They're just going to have AI take new jobs. I think it's going to be interesting to see what happens.
Can I offer a slightly different take that I heard from somebody that I thought made a lot of sense in terms of taking jobs? So there's a company, when I was in Omaha at the Berkshire meeting, I went and listened to a presentation from another company that they kind of do roll-ups and things like that. They're looking for other companies to acquire. And one of the companies that they were talking about, they had a big customer service division, and they started to put AI in. And what they found was that by putting AI in, it made the employees that they had happier, and it improved the quality of what they did. Because what happened is all the simple questions just went to AI, and the more complex questions that couldn't just be answered by AI, that's what the people that they had working for them do. And so those people became happier because now they were doing more challenging work because they got rid of all that stuff they didn't want to do. And the quality of the output that they gave was better because now they could answer those more challenging questions in a better way. So it doesn't always have to be that it relates to, it results in a loss of job. It can also result in shifting a responsibility in a different way.
I think that's a good frame, and I appreciate you bringing it up, Phil. I think there's a lot of accuracy to that. If you think about any sort of change, it starts small. Like we just start using ChatGPT to answer questions. Like, we're in there. It gets a little bit addictive, frankly, because you can do so much with it. But like, oh, I need to do this report. Let me just dump it in ChatGPT. Hey, create a report in 20 minutes that would have normally taken me 6 hours. That's pretty awesome, right? So I think starting small, you're correct. People will start to learn how to use it. But the more it improves, I mean, I'm seeing like 5 steps ahead. So what I'm seeing is, yes, it'll start improving. But then the people who understand AI will outpace the people who don't, because some people definitely won't. And the problem with AI is it doesn't follow a normal understanding structure of the world. Let me give you an example. So in college, I took a bunch of computer programming classes. I'm kind of a geek at that stuff, and I really enjoy it. And one thing that I learned was, formal structure, right? Like if you're programming code, there has to have this structure, and you have to have order. Like, or else it's a mess. Like you don't know where everything is. You don't know how things are running. Like you have to keep order in the code, right? And you have to have certain things relate to other things. And, and like, if you want to find something, it makes sense to have like, like an outline of where things are. Like, there's a whole bunch of stuff. Like if you're writing a paper, You don't just throw words on a page and say, "Yeah, there it is. Read it." You're like, "What is this? It's just a bunch of words," and yet that's how AI reads. If you put together an ordered outline versus you just put a bunch of concepts randomly strewn throughout a page, AI can discern the same thing. It doesn't need to be in order. But we keep it in order for ourselves. And this is one thing I'm learning. AI's thinking is completely different. So while we try to use our existing framework to overlay onto AI doesn't need that. It thinks completely differently. Like it's associating all these different things, but not in the order that we give it. So if you give it an outline, it's like, okay, but if you just jumbled things around, it would see the same thing. It would give you the same answers. And this is a funny thing, because as I'm writing AI prompts and code, I'm looking through these and I'm like, well, here's the order. Well, this should be here. And this other guy knows, like, no, you don't need that. It gets it. It knows where it is. You don't need to put it in order. I'm like, really? Like, yeah. Like, well, what if this conflicts with this? I'm like, it'll figure it out. Like, I'm like, in my mind's exploding. Like, what do you mean figure it out? Like, it doesn't, how's it going to know it's going to conflict? And it's like, it'll figure it out. And it does. Occasionally it gets things wrong, but for the most part, it's pretty accurate. I mean, it's not 100% great. Like, you do have to have a human overlay right now. So like if it spits something out, I still have to read through it. It's like 98% accurate most of the time. Like, I was doing some marketing thing the other day and it like kept bringing in this other niche we have. I'm like, stop. I'm like, get rid of that. And it's like, oh yeah, you're right. And then it'll do it again. I'm like, stop. And it'll do, so sometimes it doesn't know because it's not a human, but you have to prompt it like, you have to focus on one niche, not multiple. So you do have to like train it once you see errors, if they keep coming up. But generally speaking, you just like throw stuff in a pot and it'll figure it out. That's very different. And so the point being is, we need to learn how to think about how to use AI. That's something that most people don't know. Like, I'm deep in the weeds in this stuff. I'm still learning how to think about it. Most people are just like, oh, let's have it take notes. Let's do a report. Like, if you want to train it, it could be a duplication of you and how you think. You could train it to be you, if you wanted, but it takes time. Anyway, we're going to kind of wrap it up here. But Mary Meeker put out a report. We're going to go over it next week, along with a lot of other AI implications that I'm learning. But I did want to point that out, mindset-wise. I still go back to the fact that the best investment you can make in AI is in your understanding of how to use it. You will get the best bang for your buck professionally if you run a company, if you're an employee, personally in your life. Like, that is the best thing you can do, is learn how to use it effectively. And there are no great influencers out there who are masters at this. Everyone is rewiring their brain to think about AI. Because why am I going to go sit there and put together a presentation? I could just ask AI that already knows me to write the presentation that I want, and I just give it some bullet points, and it just spits all out, pictures, all of it. I could keep doing that. I could do one every 5 minutes. It's really good at that stuff. But point being is, to Phil's point, yes, initially people learn how to use it, and then the people who really know will outpace the don't. And then at some point, people lose their jobs, because AI is really close to taking people's jobs now. Like, it is. I don't think people are getting fired quite yet, but a lot of CEOs have said, hey, we're not hiring new people unless you justify it can't be done with AI. And they're right. Like, many jobs can be done with AI. You just need to sit down and figure it out. So all those of you who are employees, make yourself indispensable by learning how to use AI. Figure out, there was a good interview, forget the woman's name. She used to work at Meta's Llama in their AI department, and she was talking about AI operators, basically project managers of AI. So like, become a project manager of AI at your company, so you know how to implement it when other people don't, and you will become indispensable. So finding opportunities in companies, there are huge opportunities right now for people to elevate their status in their job by being indispensable with AI and having vision for what can be accomplished and helping the company accomplish it and being the project manager of it, because someone has to manage it, right? Somebody can do the coding, but somebody has to manage the project, and the CEO is the vision, or whoever the person is, but the project manager, somebody has to manage it. Like, it's not you can't just throw it and say, AI, do this. Like it has to be built out, it has to be managed. So that's a great opportunity for people. If you're looking for jobs, that is a phenomenal way to get a better job. Anyway, we're going to wrap it up here. Next week, we'll go over Mary Meeker's report, which I thought there was a lot of good points in there. We're also going to talk about a lot of other stuff that I had in my mind about AI and some of the things that I've been doing. So Phil, take us home here. Final thoughts, and then where can people find more about you?
Sure. Thanks, Kirk. So when it comes to AI, don't be afraid of it either. There's a lot of things that it can do for you, but you just have to experiment. Like I learned a new use that I hadn't thought of before. There's a group that I'm part of. We have monthly meetings, and after the meeting, there's a recording available. Well, you can upload the transcript to that meeting, and through the other things that I've done with AI, it understands a lot about what I do and how I work with people and things like that. And it could then go and synthesize that meeting for me and make recommendations as to how certain aspects of it can apply. And I thought that was something I hadn't thought of before that I thought was really helpful when I have a series of prompts that I can give it for things that it can pull out of a meeting like that. I'm Phil Weiss. My firm is Apprise Wealth Management. I know experiencing big life transitions can be stressful. My job is to help empower women facing new beginnings with the financial knowledge and tools they need to make self-assured decisions. As I said, my firm's Apprise Wealth Management. We'd love to get to know you. You can visit our website, which is apprisewealth.com. That's APPRISE wealth.com. And if you add /5-things to the end, you can download a free copy of 5 Things Every Woman Should Know About Finances. Thanks for having me on today, Kirk. Enjoy the conversation.
Yeah, thanks for coming on, Phil. And I'll wrap it up here. But I just as a side note, and this is something to keep in mind with AI too, I just went to Perplexity, which I've never been to. And I just went to the Discover and Finance section. There's no mention of war. I just have to say, oh, sorry. If I scroll down far enough, crude oil surges as Israeli airstrikes hit Iran's nuclear targets. I had to scroll down a lot to find one story, and everything else is about random stuff. Yeah. Anyway, you can take away from that what you want, but yeah, this is why I don't like narratives.
That's the show for this week. Thank you again for joining us in Money Tree Investing Podcast. My name's Kirk Chisholm, Wealth Manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on this show. You can also check out our show at Money Tree Investing Podcast. On our website, you'll have access to the show notes, resources, and the archive shows. Please remember to subscribe on our YouTube channel for immediate access to the new shows when they're released. When you subscribe to the show, it allows us to get access to some of the top minds of investing in personal finance. While you're here, please leave a comment and question if you want us to address it on the show. Have a great week ahead, and remember, no one will care about your money like you do, so invest in your life.